Hey everybody, thanks for tuning back into Crypto Mainly. Second video today, actually, guys. Just want to give you a quick update what with Bitcoin deciding to dump on us all. Okay, so we saw we had the breakout here. The volume, was a little bit questionable. We did mention that earlier. We did have a good breakout volume, but the volume did die off. So I did say just to keep your eye on that, guys. And obviously, we didn't want to see, the price closing back down below this support areas here. So the two areas of interest, the dotted line, we've got the dotted line, one at the top there, and then the second one. And obviously you can see this on clearer on a 4 hourly actually, why we've marked those two dotted lines off there. So you've got the wick highs and the candle body highs there. But of course this support didn't hold, and neither did the lower one. And we got this huge sell-off. Why did that happen? I mean, I think that looking at the amount of open interest that's happened in the last 24 hours, obviously there was a big spike in open interest. The positive rates turned very healthy. The funding rates turned very healthily positive, which would normally lead to sort of bullish continuation. But I actually think that what's happened here is this is just a huge liquidity hunt. We've come back down. We have spoken in the group, on the videos over the last few days about the Wyckoff. I do think that this is still playing out, guys. Remember that we spoke about the prices coming down to somewhere around this region. You'll notice I've put this dotted line at the bottom here now, which is at just under 33,000, and I actually think that's probably where we'll get the bounce from there. You can see on this, we've got this fractal here, which comes from the price action from this side, from the last Wyckoff. So you've basically got the wick high here, and I've taken a fractal from the wick high here, and that's where this projection comes from. But yeah, I mean, I think that we've spoken about the look into Bitcoin logarithmic curve, and that's showing as sort of low 32s as being possibly the bottom. And there's just a couple of things really that add up to that still, guys. You'll notice actually that we haven't broken down below the RSI. If we go to the daily, we've spoken about this chart the last couple of days. The RSI, look, you'll see at the bottom here, it still has not broken down below this key 35.33 level. And as you can see, as I mentioned on the previous videos, these blue circles here, they do lead to 25 to 35% price increases. Now, that's not to say that the prices at the moment we're breaking down from this wedge. So, we do look like we're going to get continuation to the downside. But this larger wedge here now, the breakdown from this, the measured move is in fact the lower part of the wedge, which would make sense, which would bring us down to this just under 33,000. May get a little bit lower than that, possibly closer to 32,000, and then get this spring sensation, which we've spoken about here. So possibly come down just to maybe 32-ish, then get the spring sensation and be off into the summer. I do think that summer alt season is still coming. I mean, I'm just looking at the news and things, and it says that obviously today the Bank of England have raised their interest rates by 1%, which is the highest rate increase in 13 years. And that's probably likely, very clumsily, I think, of the British government to do that in that fashion, just like that. But that's why if you look at the traditional markets, I mean, everything S&P, even like the S&P and things, is down almost 4%, which is huge for something of that size. The FTSE is the UK version, which is has taken a 3.2% drop as well. But I think, in summary, guys, this first we had the 0.5% rate hike from the Fed, which was to be expected, and now we've got the Bank of England wading in with 1% rate increase, which is the highest in 13 years, and I think that's why the markets have reacted like that. It's a great shame, really, but it is what it is. We've got to just live with it, and just carry on. No doubt in my mind that that's what's caused this big sell-off on the markets today. Traditional markets and the Bitcoin obviously has taken effect as well. But yeah, I mean, it's going to be, it's going to be. We have to keep our eye on the traditional markets to see how they plan out over the next few days. But just on this chart, guys. So we've spoken. Sorry, skipping around charts here. But we've spoken about the fact that we're going to come down, get this spring. This is all provided that the traditional markets don't completely collapse, of course. But if we do get that spring and then a nice healthy alt season in the summer, I do think that that's still on the cards. But going back to this chart, Scott, just trying to give you a bit of hopium, really. I mean, I don't think that we're going to get much lower than these low 32s. The measured move, if we look at the measured move, of this rising wedge, would take us down to just around the sort of between 32 and 33. The actual measure there is it's just under. You see that 32,920. So just under 33,000 is that lower dotted line. I wouldn't be surprised if we gradually, for the next couple of weeks, just like we have been doing, for, since all the way up here, had a couple of weeks of just sort of grinding sidewards and slowly down. I wouldn't be surprised if that carries on, and then we get somewhere down there, we get like a bit of a spike down, and then a healthy bounce. But I did think it was interesting. The RSI at the bottom here, we haven't broken this 35.33 level yet. If we do make it down to the bottom here, I've just put the measure in there. So you'll know that the blue circles, I've said, in the past, have got between 25 and 35% as a minimum, and obviously you've got these two huge spikes here. So one there, and the second move here. But the smaller moves are between 25 and 35%. So if, just for interest's sake, if I take a measure here, look, from the bottom of that 33,000, and then do a measure of 30,000, that actually takes us back up to do a retest of this this area here, which is going to be the dotted line there, which is just around about the 43,000 mark. Which interestingly, if you note, let me just take that highlighter off. If you note, that is actually the wick high there. So this is the measure, actually, is that top purple line there. So the dotted line is the top one. 43,000, should we say, for round numbers. But it's interesting, if we do get down to 32,000 and we do get that 30% bounce, it takes us back up to 43,000. And I've also added the bull market support band on here, which is obviously, it's made up of the 20-week simple moving average and the 21-week moving average. So the 20-week simple moving average and the 21-week exponential moving average. And if we go on to the weekly, because obviously those relate to weekly time frames, you'll see actually that measure takes us back up to around about the bull market support band. So it would make sense we come down, then we get the bounce. We have quite a reasonably nice alt season into the summer, back up to the bull market support band, and then we can have a look to see what happens once we get back up. So it'll be a retest of the bottom of the rising wedge, and also a retest of the bull market support band, and obviously we can make some decisions on what we do from there. You will notice on the weekly now that we have started to lose this lower, this lower support here. But don't forget, guys, that as I said before about this area here, when we were in the Wyckoff scenario the last time, so this Wyckoff scenario here, you'll notice that we lost weekly support, and we had, once we closed below the weekly, we had another week, and then even on, I'll just move that out of the way slightly, you'll see even on the following week, so you've got the close below, then you've got next 1-2 weeks of making lower lows, and it still managed to turn around and things. So I wouldn't be surprised to see something like that now. We've lost the weekly support now. We'll get maybe 1 or 2 weeks of the price coming down. We'll grind our way down to around about the 32, 33 level, and then we'll make some decisions on what we do there. If prices start to go to come below and start to go below 30,000, then that's curtains. That's going to be dreadful. But I'm not so sure that's going to happen. I think we're in a similar situation here to what we are here. We are in dangerous territory, of course, and do protect yourselves as much as you can. I'm convinced that we've got a similar Wyckoff scenario going on here, and we'll see something similar to what we saw here happening here. I've noticed on YouTube that some of the YouTubers and things, I don't follow many influencers actually, but the small handful that I do are already sort of starting to call for sort of 25, 20. I even saw sort of 17, 16, 17,000 dollar Bitcoin, and I just don't think that's going to happen. I could be wrong. If we look into Bitcoin, as we know, you'll see on here the logarithmic curves, and even with the dump today, let's have a look and see what that's done. So just to remind you guys that you'll see this is the Bitcoin price history all the way back to when it was created in 2009, and you'll notice that we haven't closed below the lower logarithmic curve at all ever in history, apart from the famous March 2020 COVID crash there. So let's have a look, see if we zoom in. Let's see what the lower band is now. And it's mid 32,000 again. So the lower band is 32,000 or thereabouts, guys. And I think that's mathematically it would make sense. Even looking at these charts, mathematically it makes sense that we will be coming down. The measured move, the open end of this wedge. The measured move. This arrow here is the head and shoulders measured move, which I mentioned here. And that takes us down to the 33,000 mark. You've got all sorts of these charts are all pointing towards the same things. Okay, guys, hopefully that's reassured some of you. Do protect yourselves, as I say, because things are looking quite dreadful now. But I think once the shock of the Bank of England's their announcement with their interest rate, I think once the market realises over the next couple of weeks that actually life goes on, the money will start pouring back into the markets. I think it's just like a shock reaction, which you kind of expect when you get some sudden sort of bad news like that. But let's see what happens over the next few days, guys. Hopefully I've reassured some of you. But trade carefully, guys. Things do look very gloomy now. But I just think it's short term, and I think we're going to have still in for a nice summer. All the best, guys. Thanks ever so much. Always remember, take profits and buy something real. And I'll see you next time. Take care.